Ira Epstein of Linn and Associates with your metals market update for this Thursday, the 22nd of August, 2019. You know, we're about 3:40 in the afternoon. The settlement prices aren't in, but they're going to be right in this general area. And the hardest thing to do tonight is anything. And the reason is we're all waiting to see what our Fed chair says tomorrow in Jackson Hole, Wyoming. We've seen 3 Fed members come out today, and they basically were saying, the 3 that were spoken to, that they don't necessarily see the reason that the Fed has to continue lowering interest rates, that they're close to their mandate. I think it was Ms. George, Mr. Harkin, and Mr. Rosengren. Rosengren didn't speak today. I think he spoke 3 days ago and said that. But only one that I'm aware of, I think one is a voting member. The other 2 weren't. I could be wrong on that. The key is what Mr. Powell wants to do. He's really the head of the Fed, and where's he going on this? The other part, of course, if you look at what's going on in foreign currencies, we're trying to figure out where are we in terms of other economies, and I'm sure they're talking about that in Jackson Hole. What's the European Union going to do? What bazooka are they going to launch to keep things going? Germany managed to get a little bit of a scrape by today on not getting into a formal recession, but it's so little, I don't know that it matters. The metal markets, well, I can't say they're bullish or bearish. I can say that they want to pull back a little. The only one that I think is still very much in the bear play is the copper market. So let's go to the charts and see what they do. We're first looking at a weekly chart that just closes. And when you create these, you're always looking at the lead month and then as it stops trading the other month. So the lead month is trading right now at $14.9380 for the week, down $18.70. December gold, and that's what this is a daily bar chart of, is not the lead month. This month's at $15.0810. And I think the settlement was about 60 cents higher than that or so. But as you can see, we're in a distribution pattern right here. Got to be concerned about that. Which way does this market come out of this is the question. At the moment, the trend is down. You have lower highs and you have lower lows. That's bearish. The market is over the 18-day average of closes, which means the bias is up. Therefore, the 2 negate each other. I have to wait to see if price and the 18-day average comes together and what they do there. You negate this swing to the downside if you get over 15.1840, but otherwise in play is the 18-day average of closes. In terms of Bollinger Bands, you had that one run up against them, and ever since then it's been drifting to the downside, and momentum was lost on the upside, calling for price because of that in the 18-day average to come together. This is called an embedded reading. And that happens when both numbers are sideways over 80. When you lose that reading, and I'm going to go the other way now so you can see it lost. Right here, it was lost on Monday. When that happens, it is a sign that momentum to the upside is gone. Now remember, I believe, it doesn't mean that I'm right, I believe that most times momentum leads price. Price doesn't lead momentum. So here you are, and the question is, how much of a break might you get? As each day goes by and you don't re-embed, what happens is, because of the structure as to how an 18-day average of closes work, that number is going to move up, and it doesn't take a lot for price to move down to it. This was yesterday, and here you are today. And as you can see, since you lost that reading, which was here, prices had closed that day at $15.70. You're $7 lower right now and about to knock on the door of that 18-day average possibility. At the same time, this average is $14.9630 today, was $14.92 yesterday, $14.87, $14.82. So it's about $3.50, $4 a day it's going up. So something near $1,500 is probably where that average is going to come in tomorrow. When we come to GLD, the popular ETF, number one, the amount of buying in this ETF has gone, I think, to a historic record. Number two, you lost the embedded reading and you can't get it back. So again, will price and the 18-day average come together? Often they do. What could throw that out is getting over 142.26. You already have the pattern of higher lows. I think you'd agree. But you also have lower highs. Do you see that? So you're coming in like that on the market. Which way it comes out of here is going to be important. It's probably going to rely in large part on the reaction to Mr. Powell tomorrow. Where'd GDX go? Total neutrality. How often's it been trading at this 18-day average? So it's in a minor downtrend that's countered because the market is closed over the 18-day average of closes, so they're neutral. I'd call this market as neutral as I know how to call it. A close under that 18-day average would put me back in the bear camp. The gold-silver ratio, for the first time, has gotten back in a while under the 18-day average in red, which favors silver over gold. It doesn't have to go big that way. It just favors it temporarily. You still have silver, though, in a downtrend. You have the lower highs. You have the lower lows. You don't have an embedded reading. You've just been overbought in this market. So whether price and the 18-day average come together will be interesting. What would be bullish this market? Not taking out right here, this low of this day, 1696, getting back over yesterday's high right here of 1731.5. You could then have higher lows, higher highs in a market that might want to challenge that 1770 level. Not saying that's going to happen. I'm giving you both what-if scenarios. Again, Mr. Powell is going to move these markets tomorrow. In the copper market, lower highs, lower lows. As long as the U.S. and China continue to fight it out and that battle of words doesn't get any better, I don't see what's friendly copper. They use half the world's copper, my friends. We already know Europe's in a slowdown. We're seeing, if you're looking at our manufacturing PMIs, they're slowing down. That today is what weighed on the copper. In the platinum market, it's the opposite, and you wouldn't think so. I mean, why is platinum up if copper's down? But yet, here you are, higher lows, higher highs. Now the settlement, I haven't seen, right now it's 860.80, and that's over the 18-day average. So let's assume it settles over 859. Then the market's entered a bullish phase until you take out yesterday's low, which is 842.60. It puts into play the possibility of 877.20. Bulls took control tonight. In the palladium market, first thing my eye goes to is I'm overbought. The market has a lower low, higher high. The bias is up, overbought, not trending, as I'll call it. Visually, we could see what it's done, and I think I made plenty of arguments, if you looked at these videos, that the 100-day average was acting as a short-term bottom. I want to get through tomorrow's speech before I know what's going to happen in other areas. In the dollar index, you are overbought. The swing line turned down. That's negated because you're over the 18-day average, which means the bias is up. I think this market went neutral right in front of Mr. Powell. Remember our research. If you like to read research on the markets I'm talking about, understanding, by the way, a lot of talk on the futures and the options markets, ideas, especially if you're grains and you're into the energy markets, things of that nature, we write about it. And there's two ways you get it, either through our trading platforms, and we have three. We have our mobile, we have a Java-based and a web-based. You can hear the oral commentaries we have spewing out during the day on our QT HTML platform, and you can also get this delivered in your email box. So if you haven't tried it, it's free. What do you have to lose? Simply go to our website. You'll see click for Ira's free offers. Do so. Sign up for the different items you might want. You can call my staff. They'll take care of you right there. Or you can click up here. It'll take you right to that page. I'm Ira Epstein. Thanks for listening. Be ready for tomorrow because it's going to be a lot of action.